this life ain't fair. And I know that you're going nowhere. Well, don't blame me for what you've done, because I know that you are having fun.
Welcome to the Clarified Realty Podcast, exposing the real estate secrets your agent doesn't want you to know. Here's your host, Tom Clary.
Well, don't you just walk away. That's when I'll say.
Welcome to the Clarified Realty Podcast. I'm Tom Clary. I'm a real estate agent licensed here in lovely Los Angeles, California. And yes, I do mean lovely, but it is sort of pouring rain outside today, a kind of hurricane force winds, but don't get me wrong, we definitely needed the rain, but I'm kind of like, we cool now, you can shut it off now, we're done. When you start talking about dams and spillways busting, I think we're pretty much reached the saturation point. What do you think, Bruno? Bruno's here. Ron Bruno, everybody.
Well, Tom, I grew up in South Carolina, so we evacuated 17 times for hurricanes, so this is nothing. This is rain.
You had your bags,
I call this rain.
You had your bags permanently packed just so that you just go around the run all the time.
We had a place that we called the Hurricane Condo. Yes.
Jeez.
2 hours inland in Statesboro, Georgia.
And here we're worried about earthquakes all the time, but it happens so infrequently. You guys are actually every few months? Yeah,
every time there. I mean, we lived there. I lived there for 10 years and 17 times. So that's almost twice a year evacuating for a hurricane. It was during Hugo, and we actually had a couple friends that evacuated to Charleston.
Really?
Yes. So they went into the eye of the hurricane.
Storm. Oh,
yes.
My Lord. Well,
yeah, that was the wrong direction.
Well, luckily things aren't that bad here. I'm going to be taking a trip today, and I'm a little bit concerned about the road up, but I think I'm actually going to be hitting the clear pretty soon. So
that's good.
Yeah, I'm not so worried. But once you get on the road, as long as you keep looking, you're looking ahead of you, driving straight. Hopefully nobody's going to run into me. That's all I care about. So we got some news today, Ron?
Yeah, we do. So the first story, this was so glaring when I was scanning the news pages. So here's a headline. 17% of consumers unaware that mortgages involve closing costs.
Come on, guys. Seriously, at this point, duh.
Right. So
really.
TILA, right? So TILA, RESPA, Integrated Disclosures, or TRID, or I like to call it the reason I drink. They came up with this in October of 2015, where we have both the loan estimate, which is a document that states this is what it costs for this particular loan. This is what your payments are going to be. And this is how much you need to bring to the closing table.
Right.
And it is an estimate that actually line by line tells you exactly what you're paying for.
Right.
And at the very end of the loan, you have the closing disclosure or the CD. Right. So it is jarring to see that even now that people don't know that they have closing costs. And so this survey was taken by Closing Corp, so a provider of real estate closing costs data and technology. They did an online survey. And so when asked what surprised them about their closing costs, 31% of home buyers were not surprised at all. Okay, so that's good.
That's good.
That's good.
Yeah.
Right? So it was about what they expected. However, 35% expressed surprise that the costs and fees were higher than expected. So that's not good.
That's not good.
That's not good. And then 17% said they hadn't expected they'd be required at all.
So, okay. So when I break that down, this is what I'm hearing. 60% of the nation are not ignorant, dumb people. Pretty much.
Correct.
At this point, guys, look, closing costs are the natural part of the end of the deal. You're going to have to come up with not just what you're paying for the house. There's going to be other rates, other kind of charges they're going to get hit. We've talked about this before. Seriously, if you don't know it by now, go back, listen to episode 2, 3, and 4, Ron's podcast. We go over this in detail. You should be getting educated. And 31% to not know that you're not going to be doing anything. At this point, I don't know what to do with you.
Right, and I think a lot of it has to do with either the realtor that's referring them to the lender, and then I think that lender, they're disguising by saying, okay, there's no closing costs.
Right. Okay.
Right.
Well, that's misdirection. That's not really not knowledge.
Correct. So you have to pay for closing costs. You're going to either pay for it either out of an increase in the rate.
Right.
So let's say it's 4.5%.
Yeah.
And they're going to quote you 4.75, and then they'll say it's 4.75 and there's no closing costs. That is incorrect.
Yeah.
What it means is you're paying a higher rate to cover those closing costs.
Yeah.
You can also pay for the closing costs in terms of the cash to close, right? So you bring the money to the table, you do it that way, or you can finance it, right? So if the loan amount is $850 and the closing costs are $857, then you can have a loan amount at $857, right? And then your $7,000 of closing costs, they are accounted for. You're not bringing money to the table, but you're going to be paying for it in the terms of amortization.
Correct.
Right?
And by the way, but that's deductible, isn't it? At this.
Correct. Yeah. So when it comes to taxes, closing costs, that you have to check with your CPA.
Of course, but we don't give accounting information here, but
that's right. But yes, so closing costs, that's a cost of buying a home or refinancing that you would check with your CPA to make sure that is tax deductible. Right. So that might be the best option. But the fact that this survey said that it was 17% were completely unaware that taxes or that closing costs were part of in this environment is
well, look,
surprising.
My feeling is that listeners to this podcast, this shouldn't be, you would not be in that percentage. You should know by now from listening to us, getting educated, getting to know the process, that's going to be about, you're going to have to deal with some sort of charge. But now I will say this, though, for the second portion, the portion of the people that are expecting it to be less, but it turns out to be more. Now, look, all sorts of things change over the course of the escrow. Things, go up, things go down. It can't always, if you get your estimate at the very beginning, it should be relatively close at the end. It doesn't, if it's some sort of extreme craziness, then something probably went wrong. Right. And so you want to double check on that. But don't come to your loan people and say, it went up by 3% or whatever. It's like, come on, guys. Things they can't know the exact number going in. It's impossible. There are too many factors that can happen. There's if it goes a day over, if it does, they can't know exactly. So you got to give a little bit of leeway. But if you're seeing some sort of extreme change in your closing cost, make sure that you come back to them and say, what went on? What do you think would be like a reasonable, like what you think the plus or minus on a change would be, basically?
So we have to make sure that if there are any changes, so first of all, there are certain transactions where there is a tolerance. So there's a 10% tolerance when it comes to insurance. There's a 10% tolerance when it comes to the appraisal. So there are certain items where we have a tolerance, but then there's others where there's zero tolerance.
Got it.
Right? So a lender fee is a zero tolerance.
Because you should know that going in.
You should know that going in.
Yeah.
Right? And that's why it's important for us to work with title and escrow and make sure that we have the right fees, because there are certain fees that we just can't say, oops, we miscalculated that, right? What's interesting is with the study, it says the most common reason home buyers cited for revisions to the closing costs was, number one, changes to the loan based on what they qualified for, 31%. Other reasons given were inaccuracies in the estimate, 27%, and a change to the loan because of a home buyer request. Okay, that 23%, the change to the loan because of a home buyer request, these things happen.
Yeah.
Right?
Right.
But the first two, based on what they qualified for and based on the inaccuracies of the estimate, well, that's an issue, and that's on the lender. Right? They should know what their client qualifies for. And if they're rushing a lock and they're rushing to get somebody in escrow and they didn't do their homework and they didn't check the guidelines and it's coming back because of that, then that's a big issue.
Yeah, absolutely.
Right? The opening of an escrow is only as good as all the work that goes into it. Right? And preparing the estimate, that is, it used to be where you could just fudge it along and you'd be fine and we just figure it out. But now it has to be right.
Yeah.
Right. And we have to take the steps and
now the question is also do you think that the changes coming from the administration are going to create this, have that kind of go away? Do you think that things like TRID are going to go away and these kind of
no, I don't
tolerances?
No, because it makes sense. If this particular, I don't necessarily agree with everything that the CFPB and Dodd-Frank created, but this is actually pretty good.
Yeah.
It actually helps me do my job better because I can explain in the very beginning what it is they're going to be paying for.
Right.
I don't have to, just I'll have to explain that later, or we'll just bury the costs, or we'll figure it out when we get to that. No. We need to talk about it up front, and it's a thoughtful conversation, and it's actually a good document.
Yeah.
It spells it all out. I mean, whoever created it, kudos to them. Yeah. And yes, it is a pain, and yes, we had to adjust to it, but I don't see that going away.
Right.
I think too many people would fight it, and I think Elizabeth Warren would be all over this thing.
Yeah.
Right? And I think it has benefited consumers, and with this study, there's still people out there that they're just unaware. And I mean, another big thing is it says that the majority of respondents, 72%, receive the loan estimates electronically.
Yeah. Now, I was about to go there with that, because when I read the article earlier, go to the rest of that sentence, and it says, guess who that 70% is? Millennials.
Right.
So it's something that every loan lender should be really taking a note of here. These guys don't, from everything I'm seeing, they want to keep everything in their computer. They want to literally just focus. It's like a tunnel vision, and they're not going to be, they don't want to see paper. They don't want to see, anything that even remotely takes them away from the little world that they're kind of connected to. And so it blew my mind that 70% was online.
Yeah, and what's amazing,
and there was a direct correlation to millennials.
Yeah, absolutely.
Read the rest of the sentence.
So it says the majority of respondents, 72%, said the loan estimates and closing disclosures were delivered electronically. Closing Corp pointed out that was also the percentage of all respondents falling into the millennial age group.
There you go.
Right? And it's so much easier to send out the loan estimate and all the disclosures, and now it takes 10 seconds for somebody to sign their initial disclosures, because it's DocuSign, right? They just click, done.
Yeah.
Right? And then they click a little box that says, I agree to electronic consent. Boom, it's gone. Yeah. Versus printing it out, reading every single word. And I still have clients that do that, and I'm happy to walk them through every single form, because they should know what they're buying.
Well, everybody should be comfortable with the world they're in.
That's right.
And if the millennials feel more comfortable, and I hate to say it like that, did you hear me say that? Like the millennials, like there's some sort of, species that nobody, hasn't come across yet. No, I'm saying the millennials tend to act this way, so we should be driving our boat that way as well. That's just the way. That's where everybody's going to go.
Yeah, and this article is just solidifies the purpose of this podcast, right? It says that lenders and realtors need to keep educating borrowers on the costs and fees associated with closing to alleviate surprises, and that's our job, right? That's in a nutshell. That's why we're doing this. That's why we had 3 episodes on the lending process,
right?
And hopefully people enjoyed it. But yeah, I mean that's our job, right? They should know.
So go back, get educated is really what we're saying. So, all right. And then you have another story as well.
I do. This is kind of a human interest story that I found pretty fascinating. So this is from the...
I'm interested, but for a completely different reason. Go ahead.
Right. So this is from the National Association of Realtors, NAR. And the title of this article says, Realtors say it's a dog's world. No one asks for their employment verification or computes their debt to income ratio. Yet, when it comes to buying, selling, or renovating a home, the family fur baby apparently plays an important role in the process.
Yeah.
So in 2016, 61% of U.S. households either have a pet or plan to get one in the future. All right, so that's statistic number 1. Statistic number 2 is 99%, 99. So, everybody except that one person said they did indeed view their animals as a family member. So Fido is on the family holiday card. You got it. Then it goes further into saying that, let's see, where does it say? It says 52% of respondents say they have completed a home renovation project specifically on behalf of a pet. 52%, right? And then the final pretty funny story here is that 1 in every 3 transactions has fallen out because it did not suit their pet.
So here's my take on this. So this is coming from the National Association of Realtors, something that I pay my dues for. And basically, I throw money each year at this organization, and I'm curious when their next big study that comes out, which is The Sky is Blue. Seriously, is this really what my dues are being wasted on? Because this is one of the most ridiculous, silly. Of course, people love their pets. Just walking around with clients, and I remember I had this one client that I showed them. They had given me this big long list of things they really wanted in their house to make sure that I want this, I want that, I want that. And it was like all these check boxes, and I'm like, okay, cool. All right, I'm gonna go. I am, the real estate agent extraordinaire, man. I'm not gonna give up on this thing. And so I go out and I literally find the house that fills every single checkbox, man. And I'm like going, oh my God, that's in a price range. I am so stoked, right? I'm gonna get this sale, right? She walks in, oh my God, I love this house. This house is so fantastic. It's wonderful and all that. And then we go into the backyard. And the backyard had let's just say a subtle drop off, right? And it had a fence. It wasn't like it was like some sort of, Grand Canyon, like, you'd walk out in the back and all of a sudden there's a cliff. It's just, there was like this little hill. There was a fence and all that. Sure, maybe they could do something to make the fence, better or whatever. Oh my God, gotta go. We're leaving. I'm like, what are you talking about? And she's like, oh no, my doggy, she's gonna go right over the edge. I'm like, no, look, first off, this is a beautiful, fence. It's going to keep it. Oh, they can, if he worked on it, he can get under it. I'm like, okay, well then you can fix certain things. No, she was not having it at all. So this is like the most obvious thing I've ever heard. And look, when we talk about NAR, right, and the whole idea of being a realtor, right, I don't know if a lot of folks really realize that there's really not a lot of barrier to jump over to become one, right? It's a matter of fact, my broker requires it to even be a starting agent, right? So it's not like when you see the R next to somebody's name that's going to be a guarantee of quality. Right? All they've really pretty done is they said, yes, I pledge to uphold all the NAR rules. And you
took the test and voila.
Yeah, I'm done, right? There's no real kind of, is this person a seasoned professional? Is this somebody? So, look, I'm intrigued by the numbers, but I'm not surprised by the numbers. I just feel like my fees, my dues should be going to pay for maybe something a little more substantial than that. I'm next is water wet?
Right.
This is really kind of.
Do people really love their animals? And the answer is yes.
Yes, as a matter of fact, they will actually do that. So anyway, moving on. All right, well, thank you, Ron. I appreciate it for the news. So I wanted to bring in our guest for today, Zach Schneiderman of Schneiderman Insurance Agency. Zach is what I consider to be nothing less than a wizard of insurance. Whenever I refer clients to him, I know that they're going to be incredibly well taken care of. He knows what he's talking about backwards and forwards. As you guys know, I'm all about protectors and protector agents, and by far Zach is one of the best I've seen. You can tell he really cares about his clients and takes amazing care of them. And I'm so glad to have him here on the podcast. Thanks for coming, Zach. I really appreciate it.
Thanks for having me. Thanks for those compliments.
Yeah, well, it's definitely deserved, and I say that with no hesitation whatsoever. So let's just kind of start with a little introduction to you, just so that I've been lucky enough to get to know you, but let's let the listeners get to know you. Where did you get started how did you get into this whole into insurance and this life?
Well, I used to actually manage a real estate portfolio, some residential, some commercial, around Los Angeles. My father was a developer out here, and
so it was kind of in the blood,
sort of. But we were sort of the opposite of that father-son team, where I was very risk averse. So I'd always say, "Oh, hold on, let's look at how we're protected and what goes on before we go do something." And he was like, "Oh, we'll figure it out," or something like that.
Right. So how did you make the move into the actual doing insurance?
So as I was looking to change from the real estate industry and managing the properties, I realized that because I worried so much about what might happen, insurance was really an easy thing to move into, considering that we'd already reviewed and worked on our own.
So you kind of had experience. You'd already been dealing with it anyway.
Yeah, I mean, we were buying insurance for our own properties. I was insuring myself on the personal side, but on the business side, and all of our tenants, we required them to have insurance and to provide evidence of it. So over time, I was helping our tenants obtain insurance, and I needed to make sure that what they had was adequate to meet our standards on our leases.
Got it.
So I was sending all the business over to our insurance agent at the time.
Right.
And I talked to our insurance agent and said I was interested in actually getting involved in this industry.
Right.
And he said, hey, come on down. I'd love to work with you. I'd gladly mentor you and show you how it works.
That's great. That's great. And the rest is history. Now getting into the idea of home insurance and getting your home insured, it's interesting because we were just talking, if you heard in the news, that about the people being surprised at there being closing costs at all. And strangely enough, I find that they get surprised that they're required to have insurance on their homes.
Yeah, they do this all the time. We're the last thing they think about.
Exactly. It's like an afterthought.
And there's people who think that their insurance is actually, they're buying a condo and they think that their HOA actually insures their contents and their things. They don't understand, oh, wait, I need my own policy too.
Right. And so let me just kind of take you guys a little bit back. There's PITI. Basically, there's the principal, interest, taxes, insurance. Insurance is the last I there on the PITI, okay?
As you see, they always bring us last.
They're always last, but but you're required. You need to be part of the whole deal. And basically the lenders want to make sure that if your house burns down, that they have, if it burns down, there's no collateral left for them for the loan. So they want to make sure that if there's some sort of disaster, some sort of problem with the home, that they can get their money back should something happen. So it's less about you guys, believe it or not. It's really about those lenders really getting taken care of.
It actually goes further than that, because what a lot of folks don't realize, most people think my insurance just takes care of making sure that if my home is destroyed, it's rebuilt.
Right.
Well, when you have a catastrophic event, take a fire for example.
Right.
Your home catches on fire, and you go and you call your insurance company.
Yeah.
You say, hey, I had a fire. The insurance company comes and says, okay, we're going to help you rebuild it. Right? We're gonna bring you back to normal.
Right.
Well, your lender is still saying, you got to pay us every month. I don't care that your house.
Absolutely.
So now you're paying your mortgage. Where are you going to live while your home's being rebuilt?
Exactly.
It's usually about 18 months you're going to be out of your home.
Right.
All right. Let's just assume 18 months.
Absolutely.
So how are you going to pay 18 months of the mortgage you've been paying all along that you probably get by on?
Yeah.
But you got to pay to live somewhere else.
Now on top of it.
So your homeowner's insurance, typically built into a quality homeowner's insurance policy, is a loss of use or loss of income, depending if it's an income property, coverage.
Right.
And that way you have funds to pay for the additional costs for you to live elsewhere, while meanwhile you're maintaining the payments that you've always made.
Got it. So here's a kind of, because it's kind of this afterthought that kind of everybody goes, oh God, we didn't even think about it. When would you be considering starting the whole shopping process? I mean, would it be before you even start to get out there looking at houses, or is it something you want to wait until after the appraisal so that you know as an agent like what the value of the home is? Like what's a good timing for it?
Well, so obviously where we're located, Southern California, the value of the home is where actually a lot of lenders and a lot of banks that aren't involved locally don't understand anything, because the land value here is so high.
Yeah.
So when you get an appraisal, it includes the land value and the improvement value.
Right.
An insurance policy is only insuring the actual cost to rebuild your home and replace it the way it was. So if you're focused on the appraised value and the lender focuses on the appraised value, you're going to be overinsured. An insurance company is going to write a policy that gives you far more coverage. You're paying for far more coverage than you ever could need. But to get back to the question you actually asked here, when should you get interested in looking at what insurance might be best for that home?
Yeah.
I would actually say when you're making an offer. A lot of times you won't know that there's been a previous claim, and a lot of insurance agents can look and see in records that home actually suffered a water loss or something like that.
Now,
you might want to be aware of it.
You bring that up, and now insurance companies are now, there's this report that you can get called the CLUE report. Excuse me, I don't remember what the exact letters stand for. CLU, I think it is. Do you guys run that now, or is that part of your, like when you guys are going to fund or
So it typically is run.
Underwrite the policy.
It typically comes through when I run a quote. It's part of what automatically runs in our own systems. So it happens more behind the scenes, but it's information I'm able to look at and provide.
Let the folks kind of understand what that means, though, in terms of and why it's important to them.
So insurance companies have reporting agencies that they share information through, and it's more public knowledge than you believe. And so what happens is when you file a claim on your home, it goes into a system that is reported among companies. So Just like the DMV has your driving records,
right?
Cars have clue reports as well, not just homes. And that's going to provide information that talks about loss history to your property.
So if there's been some sort of claim before on the home, on the car, if it's been in a wreck, or if there's been some sort of flooding or something like that, it kind of pings for the insurance company and says, you may want to know that this company had this. This house had this issue before.
Yes, and when you're when a loss is triggered and it reflects, you can have a surcharge on your homeowner's policy, or it might create an eligibility issue with the home. So if there's been a water claim, a lot of insurance companies, they want to wait 3 years before they take on a new policy for someone who's had a water claim. So you find out you're making an offer on a home, you go all the way through the escrow process, and you find out at the last minute, because you waited to check on insurance until you're about to close, oh wait, there's a water claim and this thing's hard to insure. I might have to go with a substandard company, non-admitted carrier.
Yeah, hold on a second, Ron, go ahead.
Yeah, so one of the things, so Zach and I, we work together very closely, and I try to bring Zach in as early in the process as I possibly can. And the reason why is because, especially if somebody is really tight on their debt to income ratio,
right?
If there is anything about that particular property, let's say that it's in the Hollywood Hills and it requires a California FAIR plan, right? Which adds to their costs. If they were right there on the border with their debt to income ratio, then they might not be able to qualify for that home.
You can't hit that monthly nut.
Yeah, that's right. And if we find that out when we're trying to get the declaration at the very end of the process, and then all of a sudden we're disclosing our final CD, and now we're showing it at $500 a month versus the $100 that we originally were talking about, well, that's a huge issue. That could kill the deal. Yeah. So I make sure that once we go into escrow, that they either have their insurance person set up, and if they want a second opinion, I always introduce Zach. Right. And Zach's done an amazing job. So we want to make sure that we are looking at that in advance.
Yeah, and it is going along the lines of the previous issues. I remember that there was a deal that I was involved with where basically we got all the way down through the inspections and all that, and then they decided to get their insurance. And what happened was that they found out that there was a septic, that like literally the septic tank had a $50,000, $100,000 claim against it. And so, all of a sudden, the insurance company is like, whoa, we don't want to be, involved in this. This is, we're not going to give you that. And they had to completely find some other company, some sort of other, in order just to make the deal work.
Yeah, I recently worked with a client who was all the way down to a closing. This was actually somebody Ron sent over to me. And they were all the way through the process with their real estate agent, ready to close escrow, but they hadn't purchased their insurance yet. And the problem they were running into with their existing agent was, once they finally saw the property, the home existed. It was a nice home over in Studio City, but it sat on a large lot, and detached from that home was a commercially zoned property.
Oh, wow.
Well, you can't just insure that as a commercial property under the same thing as a homeowner's policy. We had to write a commercial policy on it as well. And piecing those things together create a difference. Luckily, it was within the threshold for their loan. But these are the things that we can catch up to ahead of time if we fully look at these things.
And that's something that a good agent, a good protector agent, should be guiding you. They understand these timelines, and they understand that, look, if we don't start dealing with this early in the process, we could find ourselves in something where we're going to have to release our contingency, or we're going to have to do something. And if you release that contingency, you're not getting that deposit back. So it's really important to understand those timelines, and when that agent should be thinking ahead for you and making sure that that you have enough time to make decisions like the ones we're talking about.
Yeah, but that's where the difference is you were talking about millennials earlier. There's a tendency of millennials to think you just go online, fill out a form, and you buy the insurance online.
Yeah.
And a lot of times later on, the insurance company is going to send an inspection company they hire out to go look at the property, and they're going to find things that maybe don't qualify. Now you've closed on your loan.
Right.
You now own the home, and you find out things like, my home was uninsurable with the company I insured it with. I have to go get something else. Oh, it doesn't fit my budget. I've got a problem.
Yeah.
These are things when you work with someone who's a professional, like each of you are, we're all working together to help our client, but we're also making sure that what we provide to our client is quality advice, assistance, education so they make an informed decision.
And by the way, I do want to, later on, we're going to get back to that inspection part of it and how people don't even think about that. And I mean, it's like it's a house, you know, they go, well, there are all sorts of little things that can really get you tweaked up. But Ron, you had some sort of...
Yeah, I was just gonna say, for full disclosure, that particular case, it was another realtor that was stuck. So it wasn't my client. Because I want to make sure that we're practicing what we preach on this show.
Yeah, exactly.
Yeah, someone actually called Ron and said, "Hey, Ron, who do you use for insurance?
Yeah.
I need help." And Ron was kind enough to throw my name in that hat.
Well, as I would too if I was in that position. So okay. So we're now looking. We're doing our shopping. What exactly should we be looking for? Because I know that all the insurance agents are going to be saying, "Oh, you know, it's not about the cheapest price. It's not the thing," but it really isn't. I mean, there are really some very specific things you should be looking for other than lowest price.
Well, you know, insurance companies spend a lot of money on their lawyers to write contracts.
Right.
So when you really think about what you're looking at, if you're looking at what's known as the declarations page, where you see the amount of coverage that's provided, a lot of people compare those and the price and say, oh, it's the same thing. These guys are offering me the same thing. They're not.
Yeah.
First of all, that page only tells you the most in the most optimal situation, the most the insurance company will pay out.
On a sunny day with nothing wrong at all.
And that's the page that gives you what your coverage is.
Yeah.
But the rest of the pages theoretically take away your coverages. That's where the exclusions, the if this, but this, then that.
Yep. Mm-hmm.
And if you don't read or understand the rest of the policy, you might be mistaken into believing that two companies are offering you the same thing without realizing that.
Right.
And there are grave differences.
Yeah.
You know, are you getting extended replacement cost, guaranteed replacement cost? Are you getting an actual cash value policy? And until you read all of these little terms and understand them, or have someone as a professional that helps you make an informed decision,
right,
you're gambling with probably what's the largest investment of your life.
Of course. Yeah.
Most people, and remember, not only the largest investment of your life, because when you buy your home, contrary to other things that you purchase, majority of what you take on is typically debt. So if you make a mistake in buying your home, insuring your home, or what you do in decisions based around this, it's not that you just lost what you put your money into.
Yep.
You lose the money that you owe to some other party that you borrowed to actually acquire it.
Right.
So making these decisions are that much more important.
Yeah.
To know what you're doing, why you're doing it.
Right, and on top of it, like you kind of talked about at the head, you know, you need a place to live. I mean, you really need to make sure that you're going to be taken care of while you're going through any kind of problem with your emergencies or whatever like that. Are you going to be well taken care of?
Unless you want to go live with your mother-in-law or something like that.
No, I do not want to go live with my mother-in-law. Absolutely not. I love her to death. I absolutely love her. Don't want to go live with her. But okay. Well, so anything else in terms of what you'd be looking for if your cousin was going out looking for an insurance company, other than you, of course. But what would they be what would you tell them to look for?
You know, I tell them, one, before you buy the policy, make sure it's been underwritten and meets the guidelines of the company. So you want to ask your agent, you know, is there something that I'm not going to find later on that's going to come back and say maybe, because insurance companies typically have 30 days for a due diligence period for them to write you.
And by the way, that was something that surprised me that I heard that when I first started, was that they could give you the policy, but they have 30 days to basically go, oh, by the way, no.
Exactly, because they're going to send out an inspection company, separate from your agent most of the time,
right? And
they're going to inspect that property, and they're going to say, "Oh, there's peeling paint, there's substandard roof repairs." I mean, things need to be done in a certain condition, and you need to see a pride of ownership in that home,
right?
And if it's not in that condition when you're buying it, there are other policies that you can get for properties that need to be improved. That are, if you're going to buy a flip and you want to have it vacant and do construction, there are other policies that are available for that. And that's why we want to talk about what's really going on. What's your intention with this home? Are you moving in right away?
Right.
Are you going to be doing repairs?
Yep.
Are you going to be renting it out to a third party? And all of these things are very important, because at the end of the day, our job is to protect you. And if you don't open and honestly discuss what your intentions with this home are, we're not going to know how to best protect you.
Yep.
And it's sort of like going to the doctor and not telling the doctor what's wrong with you.
Right, exactly. It's like if you've got a bad rash in a place you don't want to talk about, and you don't tell the doctor about it, well, then you're going to have a lot of scratching to do. I mean, it's that bad.
And the last thing you want to have is a claim that you didn't discuss something that was wrong with the property or divulge it, and the insurance company then later says, we're not going to cover you. You didn't tell us the truth.
Right, absolutely. So there's, as we're shopping there's basically there's the two types of insurance. There's the replacement value and cost value, right? I mean, those are kind of the basic kind of, am I right?
It's a replacement value or actual cash value.
Oh, right,
and you got to be careful because that actual cash value sounds pretty enticing the way the words.
Cash.
Yeah, you put the word cash in there. And
give me cash.
Actual cash value sounds pretty good, right?
Right.
That's not the better option typically.
Yeah.
That's depreciated value of your home.
Right.
So imagine that they say, your home's 30 years old, we're going to take depreciation. Really, if I used all new materials, less the use of the home, it's not worth the same amount.
Right. So, like, to put it in another way, is like, let's say your refrigerator is, 10 years old, right? You're not going to get a new refrigerator. You're going to get what they thought was the life left on that refrigerator, correct?
Pretty much. What they really do is they take the cost of a new refrigerator,
right,
less the years of use against the old one you had.
Got it.
And they're left with a
So
difference
it starts
there.
with a new. Okay, got it. Now, any other differences between the two? I mean, in terms of...
Well, it's more based on what's going to be paid to you at the time of the claim.
Right.
So you have your contents coverage, which a lot of times that actual cash value can have a tremendous difference. I mean, imagine getting the value of your used clothing versus the cost to buy new.
Right.
So when you make those choices on a policy because you wanted to buy a cheaper product.
Because the cash value one is basically you're going to pay a lower premium, correct?
Exactly.
Because they're not giving you as much at the end of the day.
Exactly. And if you're not looking at the policy, you might see that maybe your contents is covered for replacement value and the home is, but maybe your roof has an actual cash value rider on it where you're only getting the depreciated value of your roof. And if you have a fire and you got to replace the roof,
got it.
Now you're coming out of pocket for the difference.
Right. So there can be hybrids. I mean, it's not just like this policy is a replacement policy. No, it can be replacement, but for the roof, it's only cash. Like it can be hybrids.
Absolutely.
Got it.
And another key thing that people forget is so especially when you're buying older homes, is a lot of these older homes were built to certain codes of the time.
Yeah.
And new codes have been put in place since.
Sure.
We're dealing now with whether chimneys are allowed and you can put a wood burning fireplace. Now down to where certain codes in Los Angeles are now requiring fire sprinklers in new homes. So if you have to rebuild your home, and the building department says in order to rebuild it, you got to put fire sprinklers in your new home. Well, the hard part is that a standard homeowner's insurance policy probably doesn't it covers you to rebuild your home in the condition it was before the loss.
Right.
Which meant it didn't have fire sprinklers.
Right.
So now, guess what? If you don't have ordinance or code upgrade coverage, you're paying for that difference.
Yeah.
You might get all the money to rebuild your home. You're going to now come out of pocket because you wanted to save $10 a year.
Yeah. Exactly. Now, I pretty much already know the answer to this question, but I'm going to put it out there. Of the two, I'm assuming that insurance agents would, if they were buying their own policies, would be buying the replacement policy.
They are, and there are even hybrids from there where you can get some policies have guaranteed replacement value, some have extended replacement value. So typically, if your home goes through from the time your home was insured throughout the policy year, and maybe there was a period of inflation that happened and material costs are a little bit more expensive, and your home, even though it was properly insured at the time that the policy was written, costs a little bit more to still rebuild it the way it was, there's usually a cushion built into some of those policies. And so those are some nuances to various coverages that you may want to look at and have the right carrier insuring you to know that you're actually protected in the event of a surge in inflation.
Got it. So when I'm looking at a policy, are there some like red letter things that I want to make sure that every policy should have? I mean, is there like, don't even think about a policy that doesn't have X.
I mean, there's policies where everything's sort of like a la carte, so you got to be careful.
Yeah.
You want to make sure that you have a substantial amount for the dwelling to be rebuilt. So how much does it cost to rebuild a home in your area? Each area is different. We want to make sure that you have enough. Some people look at it from how much does it cost per square foot, but if you just use that as a theory, someone might have marble floors versus someone might have wood floors versus, tile floors.
Yes.
So all the materials make a difference. But you want to make sure you have enough of a dwelling limit. You want to make sure you have separate structures that are equivalent to the separate structures that you have. If you have a detached garage, that's different from having an attached garage, to the fences and walls surrounding your home. Then you look at the contents, the loss of use. So there are a lot of different coverages that you want to look at. It's really having someone who can help you make an informed decision, rather than you making a decision because you thought you could read something.
Because
off
it's
the
more
internet.
it's more important for you to get what's required for you.
Yeah, and the problem is we've all come accustomed to looking up things on the internet.
Yeah.
But the last time I looked, the internet does not have a license.
Yeah,
it does not have a PhD.
It hasn't been through a bunch of transactions, and you haven't done it. So it's just sitting there in front of Google and saying, what insurance? What's the best insurance? Yeah.
And you never know. You might be reading things that are related to another state, or someone wrote
It doesn't apply.
3 years old and you don't know it. You want to deal with a professional who has a license in what they do, and when something goes wrong, you can turn back to that person and say, "But I was relying on you."
And it's important to be for the person to be local. I mean, do you think, or no?
To me, local enough.
Yeah.
I mean, we all travel a little bit within the. I think if you're working with someone within the state, they probably know the state areas. But someone who knows your area.
Right.
So, maybe. You understand San Diego, but you live in LA because you've had experience down there. That's one thing, but it's another thing when you're talking to someone who's across the country and doesn't even understand.
Yeah.
As we talked about, that the land value could be tremendously high.
Sure.
But the cost to rebuild a 1,000 square foot home isn't going to be $700,000 most likely.
Right. So, okay, moving on. So in terms of liability with your home, something that people don't really usually think about, is it added on, or is it usually covered in most policies?
Well, it depends on the policy you're getting. So there are policies.
Give people a little kind of background about what we're talking about in terms of liability attached to a home insurance policy.
So liability is something you want to make sure is included in your homeowner's policy or covered somewhere else within your insurance products that you have. If you're buying a secondary home, typically the primary home covers the liability. But you want to have liability insurance. I mean, you can have someone slip and fall on the front porch. I've had claims where people slipped and fell on the sidewalk in front of your home, even though you don't own the sidewalk, the city does. Guess whose insurance typically has to pick up the defense and cover you on that? That's yours. If you have a pool is a tremendous reason to have a liability policy, let alone even going the next step, which is really you should have an umbrella on top of that.
And by the way, I'm getting to the umbrellas, but keep on going on with the liability though.
So things can go wrong at your home and even away from your home. And your personal liability policy, other than like say for your auto when you're driving cars, comes from your homeowner's insurance or your renter's insurance. This is why we tell people you want to have one or the other depending on what kind of living situation you have. But so the liability is going to cover you for things that come from arising out of something that you might have personal liability for. That's property you own that damages somebody, something you do that damages somebody. So if you think about things you do outside of the home as well, maybe you go golfing and you hit a golf ball and it hits a car.
Yeah.
That's your personal liability insurance covers you for that damage you did while hitting that golf ball.
Right.
These are things that people don't.
But is that a personal liability policy, or is that attached to the home?
It's attached to your homeowner. Your homeowners is your personal liability.
Oh, got it. Okay.
Yeah. The only thing that's separate is when you get to your auto, professional liability, business insurance. But your homeowners, your personal liability policy is actually broader than most people really realize, and does far more if you really dissect it. And then when you add that umbrella, it probably broadens that even further.
So I got to tell you a little story. So it's kind of this ultimate version of synchronicity. Last night I get in my mail my changes to my policy. And so I'm kind of breezing over it. And speaking of that exact thing, and as an agent, who is of the future and likes to use technology, I have a drone. And part of the one of the policy things that was in it was
excluded your drone.
Excludes my drone. Yeah. So if I bring down a jetliner, I'm not covered.
It may be more of an aviation risk.
Yeah, exactly. I mean, I never even thought about it. I was like, why is this even in here? But really, it's about when you think about it being your own personal liability being connected to your home. That's why.
And you need to be careful because certain insurance companies will say that if you have a diving board or a water slide or things like that, they might exclude that from that liability claim. So you do want to be careful because even though you might have a liability insurance policy as part of your homeowners, there are sometimes exclusions, and this is why I say you really want to talk to someone about all the conditions.
Absolutely. And, look, it's so funny because when you're going through this whole process and you get down to where you've got all these documents in front of you, and it's so... Look, nobody loves reading contracts. It's not a fun thing. My wife is an attorney, and she hates reading contracts. So it's not like nobody sits down at a table and goes, "Oh, I can't wait to dig into that new, agreement contract or whatever." But it's so important to take a few minutes to just read it. Read everything if you can. I can't recommend enough. It's going to give you back. There's nothing like going through some sort of an emergency in your family or in your home and going, well, but I know it's covered. You know what I mean? Or at least it's right here.
Well, insuring yourself properly and in an informed way, when that catastrophic moment happens, when you have that accident, that fire, that oh my God, something happened in my pool, the ability to go, I have coverage.
Yeah.
This is terrible what's going on, but thank God I have coverage.
It gives you an element of peace.
Put your head on your pillow at night. You're covered.
Right.
This is feeling traumatic, but we're going to be taking
exactly. This is a tragic thing. I'm going to mourn for it, but at the same point, I'm going to be whole again, or I can be whole again with my physical objects. I
mean, we can give comfort in a time of severe stress. That yes, you're going through a lot, and this is extremely traumatic.
Right.
But we have your back, and we have you covered. If we did things the right way.
Right.
And when we've thought through those things, we can have a nice calming conversation with our clients at the time of a claim. I mean, look, selling an insurance policy is one thing. It's another when the person calls you and tells you they have an issue.
Yeah.
That's the moment where everything we did comes
absolutely
in there.
Ron, go ahead.
Yeah, so I'm having flashbacks. I'm a child of the 80s, right? And I'm just thinking, now I realize why my dad was so stressed out, because as kids, we played golf and hit through people's, homes and cars and dived off of, diving boards and all those types of things. And I mean, if you have kids, you better have really good coverage. Because if you're the parent, those kids, you have no clue what they could do, and you can't monitor them all the time. So and
it doesn't always take a what we think of as a kid.
It could be a pet too, right?
Absolutely, a pet. A pet bite or an attack.
Yeah,
but the story I give a lot of times. Sadly, it takes events and claims to make us have these stories as agents. And one of my really close friends had a graduation party. It took him sometime when he finally graduated from college. His parents threw him a nice pool party. It was like 4th of July weekend. We all went to his house, and it was a great time, man. Barbecue and some good food and goodies. And towards the end of the night, we all had a few drinks.
Yeah.
I had already left, and I get a phone call. Someone threw one of the guys from the fraternity into the pool.
Okay.
And when he was thrown into the pool in a little bit of a, everybody having fun, he lands on a girl's neck.
Oh, no.
And she broke her neck. And since then, she's had about 9 surgeries or so.
Oh, man.
And you can imagine that moment where the parents are told, come on out, we've got an emergency, we're calling 911.
Yeah.
And at first you think, we're all friends. This is all going to be okay.
We'll work it out.
But she's got to have 9 surgeries.
Yeah.
It stalls her from finishing school and doing things, and there's delays. And then you think about the medical costs, that this is above and beyond. I mean, everything you have insurance for health insurance, but this is expensive.
Yeah.
And you get to the point where her parents have no choice. They file a lawsuit. And everybody gets offended and feels bad. But at the end of the day, is what they're really trying to do is bother the insurance. And thank God that his parents had an umbrella policy that they had instead of the $300,000 that they kept on homeowners.
Since we're here, why don't you go ahead and talk about what a little bit of an umbrella policy is, just so people understand that.
So there are 2 kinds when you talk umbrella. There are some people mistake an excess liability and an umbrella policy from one another. They're very similar, but an excess liability extends just the liability limits, purely an extension. So you have, let's say you have $300,000 on your home. Now we add another $1 million umbrella or $1 million excess. Now you have $1.3 million of liability. An umbrella policy, a true umbrella, broadens coverage in places that it doesn't exist. So sort of imagine that we take your home, your auto, maybe your rental property, all the other goodies you have in personal insurance, and imagine we spray a foam protector layer on it, and the foam expands to fill the gaps.
Ah, got it.
So some policies don't offer coverage on the underlying product, but the umbrella will offer it. and expand coverage in some place that it didn't exist on an underlying policy. But the whole idea is to have an additional amount of layer of liability, so that if you exceed the limits of your primary policy for liability purposes, that you now have another layer to go through. And it's, I mean, they're fairly cheap to get. We're talking, for most couples.
And for the level of protection that you gain from it.
For $1 million of additional liability on your home and your auto, if you have 2 autos, 2 drivers, and a single family home, you're probably talking the difference of maybe $25, $30 a month.
Oh my gosh. Well, come on.
For $1 million.
Yeah, that's amazing. I mean, and you hope you never use it.
Yeah, I mean, look, you don't, even though you buy insurance, you hope to never use your insurance. You don't buy insurance saying, I sure hope I get my money's worth out of this.
Yeah.
The hope is you never have to use your insurance. And it's the hard part about the product is we're selling you something that we want to protect you. God forbid something happens, but we hope it never happens to you.
Right.
And the best thing you ever do is say, I paid my premium and nothing ever happened. And thank God, because the stress when you have a claim, I tell people, they call me and say their house just caught on fire. And I said, listen, we thought about all of these things and we've got you covered and we're going to make you whole. But I just want you to realize that it is going to feel stressful as we go through just the process. When you realize that something you cared about isn't there, and even though we're 3 weeks from the date you lost the home, that you realized something that mattered was in the home at the time.
Right.
These are traumatic experiences, and we can't replace a lot of the emotions and things. But what we can do is give you the comfort that financially you're going to be taken care of. We're going to make you whole. And while you're going through the process, you're going to have a friend to hold your hand and make sure you're going to be okay at the end of the day.
Yeah. Speaking of traumatic experiences, earthquake insurance. Can you go, what are your feelings on it? Is it worth it?
So, typically I'll tell my clients, is it worth it? Absolutely. I lived through the '94 earthquake in Northridge, and I grew up in Northridge.
Me too.
There's a lot of damage that can be done from an earthquake. A lot of people make the mistake of thinking the deductible's so high on earthquake insurance that I don't want it.
Yeah.
So the problem is in 1994 when the Northridge earthquake occurred, most insurance for earthquakes was done through the primary insurance policies, or the carrier. So, your Farmers, your State Farm, your Allstate, all of these insurance companies had their own earthquake insurance within their products. After the '94 earthquake, that ended.
Yeah.
And you have now the California Earthquake Authority, and you have some other
separate entity that does it.
Exactly. And so the price is different because it was so cheap back then. Nobody ever had to pay out. We didn't have these major claims. After the Northridge earthquake, you ended up insurance companies refused to write insurance policies because they were required under the state of California to provide earthquake insurance. So the earthquake insurance market dried up. You couldn't even get insurance when you're buying a new home. It was very difficult for what I've heard from the time. So now you have things like the California Earthquake Authority and Giavera and other insurance companies that provide it, but it's a lot more expensive. But the percentage of people that have earthquake insurance is low. You're like 10 to 12% of people, from my understanding, have earthquake insurance. So now imagine that we do have a massive earthquake.
Right.
Is FEMA going to be able to cover that many people?
You really bring up a really good, and by the way, this is something that I'd love to have a little debate about, because there's another kind of way of thinking I was kind of hearing from this, is that back during the '94 earthquake, the people who went through it, those who didn't have insurance, those who had insurance, when FEMA came along, it was kind of like, well, you're at the end of the line because you already have something that can potentially make you whole or at least make you part of the way. We're not going to even deal with you, FEMA, basically.
And I've heard of these stories.
Yeah, and so, but you bring up an incredibly good point, though, in terms of now, because so few people have it, FEMA is going to be overwhelmed if something like this happens.
Absolutely.
And are they going to be able to cover all the bases?
Yeah, I believe the statistics were around 75% of people had earthquake insurance at the time of the Northridge earthquake.
Wow, I didn't know it was that high.
It was something. That's at least the statistics I've heard.
Yeah.
Don't quote me perfectly on that.
No, of course.
But so imagine you had that much. FEMA had to do very little. When you have floods, lenders require flood insurance in areas that have high flood potential. So a lot of that's already paid for through insurance, and they've reinsured or something like that. So FEMA's got the ability to cover these kind of losses, and they've planned for them. But a massive earthquake, that's why the California Earthquake Authority is out there trying to educate people about the importance of carrying earthquake insurance. And as I tell people, wouldn't you rather, if you had to borrow money to rebuild your home, because let's remember, if you don't have earthquake insurance, you're probably going to have to borrow the money to rebuild your home, and you still owe the money on the loan.
Right.
Do you want to borrow 100% of the money to rebuild your home, or would you rather borrow 10, 15, 20% and have the rest of it covered by insurance? You're going to be paying that loan down for a long time to come. Yeah. So my belief is, yes, if you can afford the earthquake insurance, you should get it.
Right. But is it relatively high now?
It's not cheap. I mean, it can cost more than your homeowner's insurance in many instances.
Wow.
But the cost of not having insurance can be greater.
Right.
So as I would say, maybe if you have a choice when you're going to purchase your home, if you looked and said, maybe we should buy a home a little less expensive so that we can know that we can afford the earthquake insurance along with the other kinds of insurance that we need to have, we'll feel more protected. Because there's not a question of if there's going to be another large earthquake. The question is when.
Yeah. So, Ron, you had something you wanted to
I was going to say lenders don't require earthquake insurance, but something that you can do is you can go ahead, purchase the home, get your regular insurance, and then go back and add on the earthquake insurance, right?
Yeah. So one of the nice differences with earthquake insurance compared to, say, flood insurance, there's a 30-day waiting period if it's not a part of a loan transaction. So where lenders require flood insurance, there's requirements for how quickly they can make that available. Remember, we know when rain's coming, so sometimes they're like, there's a 30-day waiting period if you just randomly decide you want to
jump on the phone and
can't go do it right away. An earthquake, we don't really have a great warning system for.
Right.
And so, could you call me today and buy earthquake insurance? Yeah, you can start with an earthquake insurance policy at any time, and you don't have to wait till your policy renews. You can do it at any time, and they prorate the premium or whatever it is for the year, because the CEA matches their dates to your homeowner's policy, so they coincide with each other, whereas other companies, they don't require that. But so you never have to feel like you're in a rush. You can do one and then do the next. But if the question is, should I plan to buy earthquake insurance? It's highly advisable, because if something happens, if you don't have coverage, you don't have coverage.
Right.
Now you're leaving it all to the chance of what will FEMA do. Yeah. Will there be funds for me?
Yeah.
And who am I going to be fighting to get them, and how long is it going to take for me to get?
Well, and also, if we have an antagonistic relationship with the federal government, as we might be seeing in the future, there might not be a lot of FEMA coming our way anyway. So it's another thing to think about. So, all right, why don't you go ahead and give us a little, also, for condos has kind of maybe a different kind of way of looking at insurance as well. I mean, it's so different from just a regular residence.
They're extremely different policies. So similar to how you have a renter's insurance policy that insures your contents of the home, it's very similar. Most HOAs, when you have a condo or a townhome, the HOA is insuring the structure of the property. So the walls, and they usually stop somewhere between the studs and the drywall.
Right.
Some HOAs will cover the building improvements up to the standard they were built originally by the manufacturer of the home. Others will say, hey, you're 100% in charge of insuring the walls in of that property. These are known as an HO6 policy. There's all sorts of different forms in the insurance world. Best way most people seem to describe this one is they use the HO6 as the term. It seems to be the only one we talk homeowners insurance. Nobody talks about what form it is.
Right.
But so the HO6 is going to insure all the improvements on the inside of those walls. And so that could be your drywall, your flooring, your cabinets, and then you're going to also insure your contents of the home, the loss of use of your home. You're going to also cover the personal liability, and a lot of things that come with HOAs that you got to be careful of is loss assessments. If the HOA suffers a loss, they might say they're going to pass that loss assessment down and ask the homeowners to bear some of that.
Sure.
And there's a way on your homeowner's policy to cover loss assessment coverage and absorb that. Earthquake goes back to, you can buy a separate earthquake policy with loss assessment coverage. That's usually the most expensive of the earthquake policies for HOAs.
Got it.
The HO6 portion is that loss assessment part.
Got it.
And that's what most people, for some reason, don't carry. But it's very important when you're part of an HOA to understand the importance of how you insure yourself differently from how you would insure if you owned a home and operated the home on your own. You're part of a team here.
Right, exactly.
When you have 300 units in an HOA, you need to...
kind of linked at the hip.
You are. And you need to make sure that not just for you, are other people carrying the proper insurance to make sure that property is rebuilt. And there are HOAs that don't carry earthquake insurance. And what are you going to do when your condo unit is destroyed and your HOA did not carry earthquake insurance.
Yeah, absolutely. So, all right. Well, we're going to wrap up here for just a great talk, and but I did want to hit just basically the what we kind of briefly touched on earlier about the inspection process. And it was really funny. I don't know if it was you that I talked to about this, and it surprised the hell out of me. But this family had a trampoline in the back of their yard.
Yeah.
And they're like, and it was like 3 years after the fact, like 3 years after they got in the policy and all that. And they're like, how the hell did they even know that I have a trampoline? And they literally went through Google Earth.
Oh, yeah. So you have to remember that there are underwriters that each of these insurance companies have, and they're going to rely on various ways to underwrite. And whether it's commercial, residential, whatever you've got going on, when we look at a business, they're looking up their website. They're looking at their Yelp reviews.
Yeah.
So when we talk about homeowners insurance, someone's going to do a Google Earth, image and be like, oh, this person has a trampoline, and then you get into other things. What is the backyard fenced? In California, most of our backyards are fenced,
right? Versus
in the Midwest, where everything's just an open community, and you worry about the neighbors' kids coming and jumping in a trampoline, getting hurt, and now you got liability issues. So. But these inspections are done in so many ways. I mean, we send out companies to go out and inspect the property. Us as agents are going out and inspecting properties. And so sometimes you'll buy a home and you'll get a letter saying there's going to be a property inspection. Other times, someone's driving by and they're snapping photos of your home, and you wonder who they are. They're probably the property inspector doing a quick inspection.
Now, is this something that kind of continues on, or is it just in that first 30 days, or is it...
No, I mean, at any time, insurance companies can go back and do their own inspections, and if they notice that the home is not well taken care of, they might give you a non-renewal notice.
Interesting.
They're not going to just... The first 30 days is more about making sure that what they underwrote in the first place is what it is.
Right.
But later on, I mean, you might have a policy that's 10 years old, and, insurance company might go out and give you some recommendations for improvements, and if you don't do those recommendations for improvements, they might give you a notice of non-renewal, in which case you have until that point in time to hopefully resolve, and maybe they'll rescind that notice of renewal. But the best thing you can do is always take good care of your home, make sure that it shows pride of ownership.
Right. And also, we were talking about pets earlier. Pets, specific pets can be really not underwritten.
There are certain
like
pets,
pit bulls,
German Shepherds, Doberman Pinschers. It depends.
Yeah.
Some pets and every insurance company has their own rules and
their own
underwriting
blacklist.
Mostly it's the same ones. But what I will say is that once your pet has attacked someone, bitten, scratched, anything, that at that point in time, that animal's probably going to be uninsurable with most insurance companies. And so you're either going to have the choice to accept an exclusion of that animal, which means you're
whatever happens,
that's you.
It's you.
Or there may be options through the secondary market, through non-admitted carriers or surplus lines, but they're fairly expensive. So at that point in time, it's going to be expensive. It's really important to make sure you understand when you get a pet that you need to take responsibility for that animal, and just as you would be for your kids, you can't think twice when you don't just look at someone when your dog's growling at them. You need to make sure you understand and have trained your dog how to handle people.
Absolutely. And just one last thing in terms of as you were talking about the non-renewal notices and stuff like that. What are the things that people should be taking care of? Basically, give me three big things that people should be taking care of over the course of their home to make sure that isn't an issue. So
I mean, some of the simplest things obviously are your roof. We're recently having rains, and if your roof deteriorates, insurance is not covering things that are maintenance that you should be maintaining on your home. So there's a difference between a home warranty and an insurance policy, and so a roof is something that as it deteriorates, you need to make sure you've maintained or replaced properly. Just because it fails doesn't mean an insurance company is going to pay out a claim on the fact that your roof leaked. What caused the leak is a big question. So I would say the roof is probably one of the number one items. Another would be the paint of your home. So once paint starts peeling, that shows a lack of care for your home.
Right.
You expose it to the elements. Your paint is a protective coating.
Yeah.
And a lot of people forget that.
It's like the skin of the house, pretty much.
It's exactly the skin of the home.
Yeah.
So you want to make sure that you're making sure your home is properly protected. Otherwise, you end up with problems like dry rot, termites, other things like that. You want to make sure, especially out here in Southern California, trees are not touching the roof line. It's a real easy thing that when you have dry trees, we have these pepper trees or pine trees, and all of that can create a very dry debris, and it doesn't take much but a spark or something to travel, an ember from a fire that could be a couple miles away.
Right.
And that just can ignite your home on fire.
And also another thing about trees and shrubbery and all that touching a home as well, on the other side of that spectrum is when it's really wet. And it can also soak in, as I've heard, that like there's a termite specialist, and I hope to get him on someday. But he was telling me that the house can get all sorts of mold and all that from basically the tree being up against so basically trim back away from your house.
You never want the tree touching the house, the roof line. And then the other thing that a lot of people, because it's not seen every day, it's a good idea to have a plumber check out your pipes and make sure they're working. Homes in the area are getting older. What's happening is we're getting a lot of water claims in the insurance industry. And what's happening is a pipe is bursting. Yeah. And you end up with a massive water claim. You don't want to go through that. It's not fun. But
are those generally included in policies?
Most of the time the damage from the water is, but the cost to replace the plumbing or the pipe is not, because that's a wear and tear on your home.
That's really good
to know. So a lot
of
people don't realize that, and then they think that why aren't you paying for the plumber?
Right.
It's important to make sure that someone is looking at those pipes on a regular basis, and just because you don't notice that it's deteriorating and having problems doesn't mean that it's not. So not a bad idea to just make part of your average maintenance that you do, just like you change the filters in your air conditioning or other items of your home. You change the batteries and the replacement batteries and the smoke detectors, even though they're hardwired. Things fail. You want to make sure that you're doing what you can to have your home maintained well, even the things you don't see.
Got it. Well, Zach, really just an incredible conversation. I'm so glad that you were able to make it here. I want to have you on again, and we'll talk about everything from the seller side of you. We really kind of focused on what happens when you go to buy a house, but I definitely want to handle what sellers and homeowners, just general homeowners, should be looking at when they own their home. So please come back again. Thank you for being here today.
Thank you.
Do you have any contact info you want to give out to everybody just so they know how to get in touch with you?
Yeah, so anytime you want to reach me, you can call our office, the Schneiderman Insurance Agency, at 818-322-4744. My name is Zach Schneiderman, and myself and my staff are always happy to help. It's 818-322-4744.
Great. Zach, thank you so much. So, well, that's about it for today. If you have any questions or comments, please don't hesitate to leave them for us on our Facebook page, facebook.com/Clarified Realty Podcast, all one word. We'll definitely be able to get in touch with Zach. Like I said before, you can email me directly at tom@clarifiedrealty.com. For more exclusive bonus content and advice between episodes, please check out our website, www.clarifiedrealty.com. Also on our homepage, you'll find links to helpful buyer and seller guides that can give you some great information for starting your home buying or home seller process. So check those out. I'm on Snapchat, Twitter, and Instagram as well. My handle for all three of those is @ClarifiedRealty. I beg of you, please, please, please leave feedback and reviews on iTunes or in the comments section on our page. My amazing theme song, Hey Now, is from the band Wolf. That's Wolf with 2 F's. Please go check them out and like them on SoundCloud. We'll also leave a link to the song in the credits if we can. They rock so hard, there's absolutely no replacement value for them, because seriously, how do you replace perfection? And just a little disclaimer, Ron and I are licensed by the California Bureau of Real Estate. My license number is 017155353. Ron's is?
Guaranteed rate, NMLS 2611, NMLS ID 558706, California.
The advice we give is only for properties located in the state of California. For all other states, please contact your local real estate agent or real estate professional. And that's about it. Ron, you good?
I'm great, Tom. Thank you.
All right. Well, thanks for coming by, everybody. And remember, the greatest thing you can ever do is make someone feel at home. Take care, and we'll see you next week.
What you gonna